All right. Well, most of you guys know who we are, but we'll still give you an intro in a minute. We are presenting the Monmouth and Independence 70-unit portfolio. We've been working on this deal for, like 7 or 8 months now. It's been on the market for a while. The seller just finally got motivated enough to give us some terms that really make the deal appealing to us, and we'll talk about that more later, as well as just being a really good basis play. So anyways, we're going to present the Monmouth and Independence 70-unit portfolio today. For the record, this is for accredited investors only. This is not an offering or solicitation to anybody who is not accredited or anybody who we don't already have a prior relationship with. You got to consult your own advisors, your own financial advisors or legal or CPAs before doing any of this stuff. So just view it as an informative offering, not an offering, just informative. So we'll start off with the Stack Asset Group team. We are made up of 4 guys. So we were all running projects on our own, doing every piece of the deals about 2 years ago. And then a year and a half ago, we decided that we were going to be partners. We were sick of doing the deals by ourselves. We were sick of doing every aspect of the deal. So we all went into our own specialties and created a partnership. So I am the investment officer. I run investor relations. I also do a lot of the fundraising side of it. And then underwriting for deals, I do that with Trevor to make sure that we're on the same page about the success of the deal, and then whether or not we believe that it'll actually perform the way that we're underwriting to. Mark Gallegos, who I'm here with, is our construction partner and I guess managing partner for Stack Asset Group. He's been doing deals a lot longer than Trevor and I have. He's about 13 years into that. Gabe is also like 13 years into doing deals. Mark owns a how big's your portfolio outside of Stack?
A little over 400 in total, but
okay.
I don't know off
yeah,
outside of Stack. But
Mark was doing a lot of deals for a long time before he joined Stack. He was tired of having to do the fundraising, financing, managing the properties himself and the asset management. So he came on, and now he just gets to do the part that he is the best at, which is the construction and the development, and everything else gets offloaded onto us. And then our final and kind of founding partner, chairman of the board, so to speak, is Gabe Johansson. So he owns SMI Real Estate, as well as SMI, the brokerage and the property management company, and Open Door Capital Partners, which does all of the financing for our projects. So gets us the loans that we need to effectively close the projects and, make them work. So Gabe owns all of those companies. He is certainly an advisor to us on everything that we do. He kind of oversees all aspects of the company, but then in a major part oversees SMI property management, and we get reduced property management fees on the projects that we do ourselves that he is a part of because of that. And so just another area where we can leverage our relationships to get a better deal, essentially. We, so far as a group, have raised a little over 25 million from accredited investors in many different partnerships. We've had over 30% realized returns on all of the opportunities that we've put together. The highest return that we gave was 200% to one of our investors. It was because we underwrote many aspects of the deals very conservatively, which we do consistently. We've since kind of dialed back on that. I would say I won't promise another 200% return. However, we consistently anticipate overperforming on our projects, and we have in the past and obviously plan to in the future. Biggest reason being we're vertically integrated. So we have a team that does every single piece of the deal. We don't outsource really anything outside of legal and CPA stuff. So a lot of the back office, but as far as the hands-on parts of every deal, we touch every piece of it. So operating the project from start to finish is our job. We do every single piece. As I said before, Gabe owns SMI Property Management, which oversees 6,500 units in the state of Oregon. He owns over 200 million in real estate, and then obviously has expertise in the markets around Oregon, as he was the top broker for multifamily for 3 years. And then kind of stepped back as he started to run his companies a little more heavily. Mark has 50 million in multifamily, has done much more than that in construction and renovations, and then a decade of execution on projects. Trevor and I both source the projects that we work on. We love finding deals. That's our main role. We love structuring creative deals. That's actually how we both got into real estate at the start. Was an aspect of this deal was what we originally did on all of our own deals, which was getting the seller to carry a portion of the contract on the project. And then we'll get into more of why we love the deal structure on this one, but it's something that we've done on plenty of other deals. And this is the first one where we got to put it together and we're offering it to the market. So we're super excited about that. Side note too, we host Deal Junkies, which although the name might not sound super serious, we do have a lot of serious conversations on there about where the market's going, what we've been doing in real estate, our projects coming up, and then just projects we're working on right now, just kind of insights on the market as well as locally and nationally. Deal overview.
All right, so deal overview and why we think this deal is special and why we're chasing it. So it's made up of 5 different properties. They were all held by one owner operator that is still pretty heavy in the market, but phasing out, which is an important factor as you'll see through the condition of these properties. So no outside management for other clients. They only manage their own internal portfolio, and they have their property manager as a shareholder. So you get to see what happens when management is integrated from a condition standpoint and a preventative maintenance standpoint. And so it's a big deal as we look into a turnkey acquisition like this. It's a exhausted ownership group that lives out of state that just is managing and kind of letting these properties fall off, in bundles. And so we're setting up as a long-term, transition for this client as well, because they're just packaging these up and trying to offload them strategically. So you'll see in a few other slides of why we think it's important later, but average rents are extremely low, $1,055 per unit. Current NOI of $450,000. And you'll see as we relate those to the projections across a 5-year span, just how much those are going to move with very little lift. Just from an operational standpoint, from a stabilization standpoint, sort of an organic lift, which is a little bit unique for us. Generally, a lot of our projects are heavy value adds or new construction. So this gives us a chance just to set our operations up on the front end and see it work over time. So as we work through, projected NOI of year 5 will be at 665. So seeing a major increase, and that's not from a huge lift and inserting a lot of variables. It's just, and you'll see kind of the business plan on how we're planning to do that. So syndications, for those who do not know or have not participated in them before, the project itself is going to represent essentially a business, right? It's going to have the general partnership, which is going to be us running the project. We're going to, acquire it. We're going to manage it. We're going to be on the loans. We're going to do all of the operational responsibilities. Then limited partners, which would be people like yourself who are interested in investing alongside us, would put in capital from a passive standpoint. So they're limited because they can essentially just watch the deals happen, not have any responsibility in the day-to-day, but see the upside, participate alongside us. And when we structure these in the correct way, it can absolutely be a win-win because we are only compensated when things go really well. So the way we look at that stack is an advantage, right? Because we've set up a track record across other projects, similar projects, and really where the secret sauce is that vertical integration, right? Dane mentioned SMI is integrated on the management side. This isn't a market that we have built in, have owned in, have existing management in proximity make a lot of sense. So we see that from a management side. Then it relates down to, okay, what are we going to do on a day-to-day basis? A little bit of unit turns, organic unit turns as they come online. And that's where on the construction side, we operate in that market currently. So it's It's our same set of subs. It's our same unit turn packages. It's just kind of getting it in our system and letting it go. So we believe in those two things are a huge advantage. And then the third is just making sure that the alignment of interest is there. So when you guys are investing, you understand that we are all fighting the same fight. We are all getting compensated when the project succeeds. We're set up in a way to hold projects long term. We're not a get in, get a upfront fee, get out, get an exit fee. We're compensated when the deal is successful in the same metrics that it's successful to our investors. You want to take this one?
Yeah, okay. This one. So the opportunity is great. I just want to throw that out there. It's direct from the seller in the sense that the seller, we've been in contact with them in addition to the broker. The broker has kind of brought it to us and then stepped out of the way, which is a very good tactic by a broker. Just if any brokers are listening, in the scenario where you have two educated parties, being able to just put them in the same room, if they can have conversations, can oftentimes lead to the deal getting done better. And so the seller's super happy with it. The properties are really close to downtown as well as the campus, Western Oregon University, and there's low competition. It's hard to build out there. The zoning doesn't allow for building super high, and there's actually not a ton of land. And there is a little bit of land on one of the projects that we're buying, which we're super excited about it. The upside on the project, a major part of it comes from the seller carry component. We'll talk about it more later, but essentially the seller's carrying $4 million of the $8 million purchase price at 4% interest only for 5 years. He's also allowing us to put a first position loan from a bank on 2 of the 5 properties. So the total leverage will get up to about $7 million. We have a budget built in there and then some fees built in there. And so the total raise is slightly higher than that, but the leverage on the properties themselves will be about 7 of the $8 million purchase price. The operations currently are pretty good, is what I would say. So none of the units are trashed necessarily. They're all kind of B turns or C plus turns, and the rents are the major thing where we can come in and just raise them in a lot of the cases. So for the most part, they're $200 to $300 below market, but the turns are in pretty good condition. And so on a lot of these, we believe we can raise the rent anywhere from $50 to $100 and keep most of the tenants that are currently in place. And then there's a few turns that we have to make that'll raise the lowest rents back up to market, which we put at $1,250 to $1,450, depending on the unit type, because this is a mix of studios and 2 bedrooms. The fit, it aligns with us super well. We already own stuff in this market. Like Mark was saying, we have management in place. The turns are super easy for us because it's in our backyard. The goal is to hold it long term. The basis on it is super low. We're at $114,000 a door. There's comparable sales much, much higher than that. And so we feel super good, even from just the angle of if we came in, bought it, and held it for 5 years without the upside, but there's plenty of upside on it. And this is already in the hub of where we own.
All right. So from a market overview standpoint, Monmouth and Independence, is somewhat unique from a product offering. The school has a big driver there. Obviously, agriculture has a huge driver there, but we've seen population growth as people are starting to push themselves out of Salem. It's somewhat of a bedroom community. A lot of the tenants base here is long-term. It's not necessarily student-driven. The student market there is very much surrounded by the school, and some of these, are in that area. But looking at the rent roll, it's long-term tenancy, and it's also coming from the management style that these guys operated in. You'll kind of see why their rents are lower, but they're essentially targeting the long-term tenants there. And you look at the income base, it's a strong income. The rents that we're at existing and where we're going to go is very much, middle of the barrel, low rent territory, because there's some new product in that marketplace that's driven around the tenant, the student housing. And so from a long-term tenant standpoint, we're going to always be under market, just from the age of these assets and the type of turns we're going to be doing. So we really feel good about that and the demand that's going to be there. And then of course on the cap rate side, we're not pushing anything crazy. We're just trying to get it stabilized and showing valuations in that 5.5% to 6% range. And of course, the schools have a huge part to do with the velocity of the overall population. The Independence and the Monmouth are both similarly sized, but there's continued pressure on the new development side in Independence. The local building department has really compressed a lot of that growth with pushing SDC fees really, really high. So the ability to build an Independence is really low. Monmouth is a little bit different, a little bit easier to develop, but there just hasn't been a lot of new projects coming online, at least that would hold and compete against the price points and where we're going to be. So we like the market a lot, and of course, operating in that market currently, it makes a lot of sense for us. So we're going to run through kind of each of these particular properties because there's 5 and they're all small plex, sizes. But you'll notice just from a condition standpoint, we're at a hardy siding. We have strong concrete and steel stairs and floor systems, but it's nothing over the top. It's accessible in town. Obviously being a main street road name, like it's just right in the center of where it needs to be. They're easy to get to. They're somewhat appealing, but you'll see just from a maintenance standpoint that the ownership group was on site a lot, and they just kept up with it. What they did not keep up with was how to turn units fast, how to get them at the highest price point. I don't even think they were online. They were like using newspapers and trying to advertise through word of mouth. So you'll see that as a consistent tone throughout. So project's going to be south end of Monmouth on Main Street, really, pretty close to Western Oregon, but being off Main Street, that's the driver there. And so the main west property is 10 units in total. And, overall, we're just essentially turning the units as they come due and doing light repairs there. So flooring, paint, every once in a while we'll do a countertop, but the cabinets are in good shape. That being in the 60s era property. So going through a full home inspection on those already. Our team's already done it. We've analyzed the plumbing and electrical, and everything's in great shape, and they're a low lift across the portfolio, but this one in particular, just the style of roof that you'll see, gable roof, like everything is pretty low drama there on this particular one. So Oak Villa, this is on the other side over in Independence. This has the excess land that comes along with it. It's an interesting build type, but being a 1-story and no steps into the property and having big French doors in drives a lot of that older tenant base, which just means they're very sticky. They don't move. Everything is walkable to their backyards, to their garden areas. The landscape you'll see is just all rock. These guys know how to manage as cheap as they possibly can. They're keeping up with paint. Obviously, it's not the coolest, trendiest colors, but they are keeping it, where it needs to be. And they just have had tenancy for so long that they don't have a reason to update these units. And so this one has a membrane roof, but everything looked really good on it. There was a new roof installed recently. So vinyl windows throughout, just the kind of properties we want, right? So off of Main Street again, really walkable. And this one's interesting because you can hop over and go through River Road over the bridge and get into Salem a lot faster because you're right next to the bridge getting over the river. So Parkside, this is the newer, it's the most renovated. There is new siding installed and new deck and rail throughout. And this one's probably our most appealing, I would say. And so Parkside, and another late 60s model, but there's a few that have new flooring. For the most part, there's a lot of original carpets and every so often some new vinyl. But of course, on our unit turn packages, vinyl floors, paint, get the switches and outlets updated, get a couple faucets updated. It's just the bare bones. There's no big overhauls on these. It's just, is about as cheap of a unit turn as you could expect, and then seeing a few $100 increase on the upside. So real close to the last one in Independence, darn near walking distance, and we like that it's so accessible to downtown Independence, which has really become a huge highlight to our tenant base. Independence has done a great job to access the river, and restaurants and all of that. So we really like being close to that activity on Independence side. So Plum Court, this one actually has a metal roof, another gable roof system. This one has a little bit more structural things we got to take care of, but it's about as light as it comes. It's making sure that our rain drains are really working properly. There's been some kind of janky repairs done on the back side of the property that we can take care of pretty quickly. And then just on the inside, I would say 30-40% of them have been updated. And so we just are going to continue to chip away at those, making sure that the stairs are up to code and compliance and safety and all of that. But for the most part, all this thing needs is a good pressure wash and getting the parking lot restriped, and we're going to be looking great. So this one's real close to the first property that we highlighted over on the Monmouth side. Good proximity, really good for the crews to bundle up unit turns together at the same time for quick repairs. So Catrone is going to be kind of the most unique one. The original property had the two houses up front. These are that style, old house where the attic is kind of feels like an attic, but it's essentially just more bedrooms and bathrooms, but has a little bit harder time keeping up with the heat and the cool and all that. But what's interesting is the tenants here have stayed for a super long time, and there's really nothing that we need to jump at on a repair side. They are happy being there. They're large unit count, bedroom counts on these two houses, but there's new vinyl windows. They are not interested in moving, so there's no necessarily reason to do a big overhaul, but they're all older homes. They need a little bit of love, but for the most part, the tenants are happy. And then if they do turn over, there's a lot of bedrooms to rent out. And this one is real close to campus too, which is great. And then the 2-story apartment in the back is more conventional membrane roof. These, or majority of them, are turned, and this is where we're seeing our highest rents from just the existing advertised units. And so we're just going to follow suit with the type of turns they're doing, solid wood cabinets, vinyl floor, paint, just like everything else. But, there's no preventative big maintenance items we need to do on these, other than these old houses being just of older age. Like, there's nothing really that catches our eyes on these repairs. And of course, right next to the other ones as well. So you'll see on this map, like, how tight all these properties really are. And from a amenity standpoint, where they sit with local retail and restaurants and campus and access back to Salem, like, these are about as good as you'd want for management and for the tenant base. So the business plan overall is really just getting the rents up to market. So you'll see through the NOI increase, like, how much that moves the needle. But from our standpoint, we could even reduce our turns and I think hit the rents we need to be at. But when we do our turns, our standard, getting the products bright, clean, refreshed, we don't see any trouble filling at that higher rent without any sort of excess, like, push on the marketing side. The exterior upgrades are extremely light. It's just making sure that those stair systems last a super long time. A lot of them are steel based, and so we just have to make sure that we're keeping up on touch-ups and making sure that the metal doesn't get too blown out. And of course the curb appeal, making sure that things are clean, bright, accessible, trees are maintained, and then just getting them into our ecosystem on the operations side. So SMI would step in, do what they do best, get these fully inspected, ongoing with the tenant base, making sure we're getting the tenants out that need to be out, making sure we're up to market. And then of course, just on our push of trying to get everything stabilized and up, it's going to increase that NOI so much and be able to increase the total portfolio value a ton. And you'll see on our metrics in a little bit just how much of a difference that will make. So from an NOI standpoint, of course, that's our net operating income. We're existing at 450. We believe in year 5, just through a light turn throughout the, a few every quarter, maybe 10 or so a year, we're going to be increased to 665, reducing the expenses from 45% where they sit now to 40, which is pretty conservative. We think we can get below that, but just running it at a 40% across that 5-year mark. The income from the just gross rent side of things is going to go from 830 to 1.1. And that's still going to be below market, like below the threshold, right? Like the most people are going to be in that price category and see that rent and be like, oh, that's a competitive rent below a lot of the competition. It's not pushing the rents by any means.
Yeah, to chime in there, we underwrote based on the current market rents, not projected rents in 5 years. And so the 1.1 million of income is based on what we're seeing for 70s product with pretty average to A turns right now for 1 and 2 bedroom units, not with any upside. I mean, part of that is because we've seen so much rent increase over the last 5 years. And so we just don't want to bake that into our pro formas. But they're lower than what current market rents are at. So
yeah, so we have a good cushion there, a lot of meat left on the bone as we start to push things, but this is just analyzing it from a conservative standpoint. So with all those things applied, an acquisition of 8.3 range, and then now we're going to be over 11 million. So a really solid increase there at a 6 cap. Hopefully rates continue to get compressed and caps continue to help us, but this is where it sits as we just run it through our business plan. So why we believe that the Stack Asset Group's secret formula, is essentially just buy at a good value, right? Which we show that we have done 29% below our stabilized value. And then we break it into operations and financing. So the 3-prong approach for us. So on the value side, exhausted landlord who's given us favorable terms, and then you interface the operational side of things. And that's the whole picture, right? So as we break out each category, you can kind of see through this spreadsheet that from a pricing standpoint, we're well below, right, on a per unit basis. I mean, 114 per unit is outstanding. And that took a lot of negotiations, a lot of time, and the perfect storm with the seller who's getting more and more impatient to sell. So that worked out in our favor for sure. Then you place them in and make sure we can operate well. So we look at 1,055 as an average rent. All we got to get to is 1,250. It's 15% gap. We believe that 1,250 is going to be extremely competitive. And you see what happens on the NOI side and the expense side. And then the last, prong approach for us is going to be on the financing. So interest rates are obviously hurting a lot of deals right now, but we've combated that by getting extremely competitive seller carry debt, at 4%. And when you look at that compared, just on the OM that the realtor group had shared, everything is running at a 6+% interest rate, which is market, right? But when you blend having the majority of the leverage really low and fixed, and it just really changes. Yeah, it just changes the game. So when you add all 3 of those things together, that's really what we believe is that stack advantage on this particular deal. So we're excited about that. And we think that's why this deal makes a lot of sense. So you want to take the return summary?
yeah, I'll go through it. So the raise on this is 1.6 million. That encompasses all fees, all budget, and then the down payment on the property. We put in a little bit extra in case we didn't get quite the leverage that we wanted on the bank financing portion, as I was mentioning earlier. So 3 of the properties, all 3 of the ones over in Monmouth are being seller financed. And so that's $4 million of the financing, interest only for 5 years. And then the other 2 properties over in Independence are getting bank financing. So that equity raises for all 5 of them. The preferred return that we're offering is 7.5% current and then 7.5% deferred. And so we'll be paying that out quarterly. So if you put in $100,000, then over the course of a year with quarterly distributions, you would get $7,500 back out, assuming that we perform the way that we believe that we can. And as we've just shown you, we think we have good reason to believe that. And then at the end of the project, you'll get another 7.5% deferred kicker, but that's an annual 7.5% extra. And so on top of the, 7.5% that's getting paid out, you'll get another 43% at the end of the project, or 42.5% at the end of the project, which gives you, a 1.43 equity multiple on it as well. The hold period's 5 years. If we end up selling or refinancing the project out before the 5-year term, then there is a small additional kicker that's given to the LPs just so that you can hit a higher return, and since you got your money back a little bit early. So that's if the project is sold at 4 years or earlier. Again, the sale and refinance projected value is at $11.1 million. So we feel very comfortable with the returns on that. These are the risk factors and mitigation. So we obviously manage in the market, know the market super well. Mark has built projects out there before. We own projects out there right now that we have to turn units on. It's also within 15 minutes from our headquarters in Salem. So we're not worried from a leasing perspective. We know the market really well. Right now, they're fully occupied. They had one vacancy when we went under contract because they had one vacancy when we went under contract. That was not their fault. They've held it over 95% occupancy. Obviously, we underwrote to 95% occupancy. We don't think that it's fair to ourselves or the investors to underwrite to anything different. However, they've held it much higher than that. From an interest rate perspective, it's a 5-year timeline, and we're getting 5-year fixed rate debt. We never do anything under 5-year fixed rate unless we're doing a construction project. So on something like this, where we know we're going to hold it, it's already stable. We know that we can get fixed rate from the banks, and then obviously have $4 million at 4% from the seller. There's no reason for us to go variable. The interest rate is maybe going to be a little bit higher on the front end than it would be, but we don't know where interest rates are going to go still, and we don't want to take that gamble. We would rather know that our underwriting works at the interest rate that we have and that it's not going anywhere. From an operations perspective, increases in taxes, insurance, or payroll might be, scary, I would say. To mitigate on the payroll front, our property management is obviously in-house, and so we already get a discounted property management fee. We have a little bit of leverage there in terms of if we're performing the way that we want to, then we have an asset management fee built in anyways that's not going up, and so as rents increase, it's based on the increase in the income, not on any flat rate. There's no on-site property manager anymore. They have 2 people that the current owners have 2 people that they were paying full time to manage these properties and then the rest of their portfolio. But a lot of the money was coming from these 5 properties because these are all their largest properties. From a taxes and insurance perspective, we baked in higher than what we got on insurance. So we actually underwrote to 40% higher than what our actual insurance quote was at. And then from a tax perspective, there's no major material change in the property in terms of we're not building anything new. So there's no need for reevaluation on the price perspective or on the tax perspective. So when it comes in, the max that it can increase by is 3% per year. That's Oregon law. From a market perspective, we feel really confident just because the university is growing. Mark actually just did what did you guys build? The gym out at Western Oregon? What did you redo? Did a bunch of stuff out there. I don't know.
At Western. Yeah, we did.
Yeah.
We've been doing a lot for the athletic department. They've actually brought men's soccer back, and it's been a lot more energy around the school. And I think it's been received really well because, you look at football, they're not going to really be able to compete with Oregon State, but from a soccer perspective, they're a national contender for the D2 level. So it's exciting, and I think that it's improved the local market, and people are starting to be out there, especially Independence. People really like being out there. So yeah, I think overall we feel strong that area is just going to continue to improve. It's not going to be crazy spikes, but it's just going to go in the right direction as people like to have be a little bit farther away from the hustle of Salem.
This is also the biggest thing in my mind, and I'm not a builder, but a metric that I look at a lot is basis on projects. And so when I see something that's well below the replacement cost, but can still get really close to the rents that you would get if you built new construction, I get really excited. And so the basis is $114K a door, but the units are sizable still. So it's $160 a square foot, where on new construction, you might be double that. And so, we have a project that's being sold at double that. And it's, actually a little below what the market is, frankly. It's not in Portland, but anyways. So we feel really, really good on the basis, and that's a huge part of why we feel comfortable with our underwriting on the project. We also think the timing is super good, which is why we got the basis that we got. I am not Warren Buffett or whoever can time, Ray Dalio. I don't know. Whoever knows how to time the market, I'm not that guy, but I do think that we're very close to the bottom. It might go a little bit lower, but I think that we're feeling pressure from the Fed. Well, the Fed is feeling pressure right now to lower interest rates even more. So I don't see them going up. And from the commercial real estate perspective, the most major indicator of where pricing is going to go is just interest rates. And so as interest rates go down or stay the same, we're in a better and better position as the time goes on for this project.
One more thing too, that I think layering in on the expense side is, from a construction and a maintenance standpoint, there's always going to be some layer of variability on the repairs and unknowns, but our ability to get in there way before, this date and get a full inspection of every unit, understand the utilities of every unit, understand where there are things that could be exposure points. We feel really good about this project. And I think it just comes down to the fact they've owned them a really long time. They're paying attention. They're getting ahead of all the things. I mean, at the time of visiting, Dane was hinting towards why one of the units was vacant. They had a tenant that had been there a very long time and had passed away in one of the units. And we watch how he approaches it, and he's in the middle of, his whole plan to turn the unit for us, exactly how, in their line of how they would turn units. And so they're just on the ball. They're getting it done with or without us kind of thing, which was great to see that they are just taking a preventative approach on the way that they manage these. And so we feel good about it. There's some projects we enter into and say, this is our blind spot. We're going to add a big percentage of, just contingency on top, because we don't really know where it's going to land. But our only real contingency that I would actually have to add in on the insurance note was like, insurance has been the crazy part of this lately. And so we know our factor, we increase it there. But on the construction side, like, we're doing a good job of just getting in front of all of these and making sure that we feel good about it and have kind of uncovered every rock and make sure that we can stand behind it and get a really solid construction budget. And then that's also why we believe the management side and the construction side are just some of those levers we can pull to make sure that these projects are successful for the team.
Here is a little bit how to invest. So I will run through all of this with any of you who are accredited and would like to look at a project like this. I'll have my contact info on the last slide, but just a brief breakdown. We have an investor portal called Invest Next. That's where everything happens. So if you are accredited, I'll send you a link to it. We can have a meeting first and talk about kind of what your goals are, because we have other projects as well that might be interesting, or this one's ready to go. But we have the portal called Invest Next, and that's where everything that you need will be. You'll create an account in there. I'll verify your accreditation. We'll send you all the docs that you need to see with even more information than all of this, so that any questions that you have might be answered. Anything that's not in there, you can ask to me. It'll also have the PPM, which is the private placement memorandum, which is essentially just a securities offering. So any publicly offered security has to have this. It's all the legal documents that protect not only us, but also you from anything that we might do, whether intentional or unintentional. It won't be intentional. But that's to make sure that, Marie asked if non-accredited. So non-accredited investors cannot participate in this project specifically. The main reason is that we're advertising that or advertising this. So the webinars make it so that they can't. We will have projects in the future, though, Marie, where non-accredited investors can work with us. And so on the last slide, if you book a call with me and we kind of talk about what your goals are and build that relationship, then in the future, when those projects come up, I can talk to you about those. And we'll have opportunities in the next 6 to 12 months that you'd be able to invest in. On this, you also sign electronically. Awesome. You sign electronically and wire funds, via the same portal. And so all of the wire information is in there. If you have an IRA or a 401k, but you can convert to a self-directed IRA, you can also invest that way. And the funds are handled a little bit differently. Your fiduciary will explain all of that though. And usually I'll just end up connecting with the third party that runs all of that. And then at the end of, once you've invested and we close on the project, which the close date right now is targeted at October 30th. But we are anticipating all of the funds to be collected by September 30th. And so I wouldn't wait on it. We have a bunch of prior commitments from people we've already talked to, and then just wanted to give other people the opportunity through this webinar. Once it does close, you'll get a welcome package, and then you'll start receiving monthly updates from Mark that'll tell you just how the project's been going, where the finances are at, what we've gotten the rent roll to, what vacancies at, all the things that you're going to want to know high level so that you know how the project is performing.
And that portal that he mentioned, the InvestNext portal, that's going to be that hub, basically a dashboard.
Yeah.
You'll be able to log in, see all the updates, see all the tax stocks, all the performance stocks. It's all going to be in that. So where you subscribe to the project is also going to be the same login that you can access any of the deals that you're participating in with us, and then all the updates that come along with that, and all the documents that will be stored in there for the life of the project.
Common FAQs. The minimum investment on this project is $50,000. A lot of people ask when they'll receive distributions. I already mentioned that earlier. It'll be quarterly. So after October 30th on the close date, every quarter past that, you'll receive the distribution. I think that's annualized though, if I'm not mistaken. So our CPA tracks all of that. So if we close October 30th, your first distribution will be January 1st. And then it'll just be regular through there. So it's not going to be some random arbitrary date. How are tax docs delivered? We have a CPA who specializes in syndication, who does all of our tax documentation. That's one of the things we don't have in-house, and I don't anticipate us having in-house anytime soon. He is very, very good at what he does. And so he runs all of that. You'll get a K-1 annually that comes from the holding company. Can I invest through an IRA and LLC? Yes, you can. Absolutely. We can talk through the intricacies of that depending on your situation if you hop on a call with me. And then any further questions? If you want to chime in,
if
or
you guys have any
chat.
questions for us.
Everything's welcome. Yeah, $50,000 minimum investment. I'm going to be the best one to talk to just for kind of how to get the money actually in. And then also any other questions about the project that you might have. I'm pretty downloaded on it. Any construction questions, I'm always going to lean on Mark for that. And so there might be a little delay in my response if it's a, budget concern or what's included in the budget, or any, questions about whether or not we've checked the sewer or condition of the roof or that kind of stuff, which we have on all of that. But
yeah, and maybe one thing too is because this is a local project and potentially you guys are local, if there was a reason to have a drive-by, have a view from the outside, we probably won't be able to get you on the inside, but just given an opportunity to show, that's the benefit of investing in a project like this. It's a tangible asset that's local, that is you can swing by on a monthly drive-by. Like that's one of the benefits that a lot of our investors seem to enjoy, is the fact that it's real, it's close. They can go and check it out with or without us and see, oh, they are under construction on this. Oh, they are painting it. Oh, it is, true to the business plan. And that's a huge push that we want to make sure that accessibility is there. And a lot of times we do have investor meetups and different things around these projects to kind of give inside access. And so we try to make it accessible. We try to put ourselves in your shoes of, it's a big push to put the money out there, of course, to trust a team to operate it. But we just try to put ourselves in your spot and understand what it would feel like. So we try to build our operational principles around that, and making sure that all of our incentives are aligned. So feel free to ask any kind of question regarding that. How to feel comfortable in a deal like this. We're happy to talk through that and show you behind the scenes of why and how and what it'll look like in the future. So thank you guys for joining, and feel free hammer away with questions now or later, but we appreciate the chance to show the project. And of course, if this deal doesn't fit or if it's not the right time, there's deals all the time. And we're going to continue to build the list of people that are interested in doing business with Stack, doing business local. And so if there's more projects that are a better fit, just get on the list and we'll continue to try to add value through our email newsletter and different marketing items. And then also just these investor meetups too, to meet, other investors alongside and try to get more feel for who's operating, what kind of deals they do, and get to know us as partners on it. So yeah, any other closing notes, but feel free to ask away.
Yeah, and you can email me too, obviously, at that email, or call me. Might not answer the first time, but I'll give you a call back. Please leave a voicemail. If not, book a call with me through that QR code. So you can scan there. It'll go directly to my calendar. You'll only see opportunities where I'm free. We fixed that. Canon booked a call. I still owe him one. But anyways, that's all we have for now. We're super excited about the deal. I like what Mark said about finding a way to get connected with us. If it's not even working on this deal with us, it's just good to build the network. We're always excited to do that. So anyways, we appreciate you guys. We'll stay on for a couple more minutes. If anybody has questions, once you guys are out of here, then we'll shut her down. Sweet.
I don't have any questions. Just wanted to say thank you.
Yeah, thanks, Jamie. Thanks for coming.
Yeah, of course. Thanks. Talk to you soon.
Yeah, talk soon. See ya.
Bye.
All right. I think we are all good. Again, feel free to reach out to me, any questions, any desires, or just to talk about the deals you're doing. I like talking about deals. I'm open to it. We're going to shut it down for now, but we'll have a recording of this that'll go out just in case you want to go through any pieces of it that you might have missed. And then we'll also send out the offering memorandum to those of you who are already accredited in our platform so that you guys can take a look at that. All right.
All right.
Have a good day,
See you guys later.